Welcome back, financial gladiators. Today, we're diving deep into the fascinating and often explosive world of hard-to-borrow stocks and potential short squeezes. We're scrutinizing a unique case that has popped up on our screener, Joncho Inc., ticker symbol ZCMD. We'll break down why this microcap healthcare information provider is turning heads from its astronomical cost to borrow to its recent reverse split. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's start with the basics of ZCMD. Joncho Inc. operates squarely in the healthcare/health information services sector, primarily serving healthcare professionals in the People's Republic of China. Their core offerings, under the ND brand, include healthcare information, education, and training services, alongside some patented drug sales. With a current market capitalization of just $7 million, ZCMD is firmly in microcap territory, which often means higher volatility and unique dynamics. What is cost to borrow and why it matters? At the heart of any potential short squeeze is the cost to borrow, or CTB. This is simply the annualized fee that short sellers pay to borrow shares they intend to sell, hoping to buy them back cheaper later. Think of it like interest on a loan. A high CTB indicates strong demand from short sellers to bet against the stock, or, more often, a very limited supply of shares available for borrowing. When borrow fees start climbing into the hundreds, or even thousands of percent annualized, it signifies a market under immense pressure, making it increasingly expensive to maintain a short position. Why this stock is hard to borrow right now. ZCMD has landed squarely on our hard-to-borrow screener, and the numbers are truly eye-popping. The cost to borrow fee for ZCMD currently stands at an astounding 846.6% annualized. Highlight CTB. This is not a typo, it's an incredibly high fee for short sellers to bear. With an estimated float of just 1.1 million shares, ZCMD has a very tight supply, which naturally makes shares harder to find and more expensive to borrow. Our internal composite squeeze score for ZCMD is 47.5 out of 100, reflecting this elevated CTB and small float, among other factors. Remember, a high cost to borrow doesn't guarantee a squeeze. It can also reflect strong conviction from short sellers who are willing to pay these steep fees because they believe the stock will ultimately fall. Squeeze mechanics explained. So, what is a short squeeze? It's a situation where a stock's price surges upwards, forcing short sellers who bet against it to buy back shares to limit their losses. This buying action, in turn, pushes the price even higher, creating a snowball effect. When a stock like ZCMD has a high cost to borrow and a small float, the pressure on short sellers can intensify rapidly. If the price begins to move up significantly and shares available to borrow become scarce, those 846.6% annualized fees become a serious burden, potentially forcing short sellers to cover their positions by buying back shares, regardless of conviction, thereby fueling the upward price momentum. Dilution risk check. Before getting too excited, we always perform a critical dilution risk check. Dilution occurs when a company issues new shares, effectively increasing the total number of shares outstanding. This influx of new shares can absorb buying pressure and make it much harder for a stock's price to rise, even if the cost to borrow it is sky high. In ZCMD's case, our checks reveal no recent diluted SEC filings like -1s, -3s, or 424 BS in the last 90 days. This means ZCMD is not actively flooding the market with new shares, which is a positive sign for any potential squeeze thesis. Recent reverse split watch. Now, this is an important factor for ZCMD. Joncho Inc. executed a 1-for-3 reverse stock split just 35 days ago on June 29, 2026. A reverse split reduces the total number of outstanding shares and proportionally increases the share price. Historically, for many micro-cap stocks like ZCMD, reverse splits often lead to renewed volatility or a noticeable price pop within about a month after the split. This isn't a guarantee, but it's a pattern we've observed as the market digests the new share structure and price. ZCMD being 35 days post-split puts it right in that window where we might typically see such activity. Important disclaimer, this video is for educational and informational purposes only. Nothing in this video constitutes financial, investment, or trading advice. Always do your own research and consult a licensed financial advisor before making any investment decisions. Past performance does not guarantee future results. Let's look at ZCMD's recent price and volume action. Today, the stock is flat at plus 0.0%. Over the last 5 days, ZCMD is down minus 3.42%, and looking at the last 30 days, it's down a significant minus 38.5%. Share price chart volume is also quite low today, at 949,290 shares, which is only 0.1 its 30-day average volume of 9,765,788 shares. Show volume chart. This low volume combined with a significant price drop over the last month could suggest a period of consolidation or disinterest. For a potential squeeze in ZCMD, we would need to see a dramatic increase in buying volume, sustain positive price momentum, and ideally, a shrinking number of shares available to borrow, though this specific data isn't readily available for ZCMD right now. The combination of an extremely high CTB, a small float, and the stock being within a post-reverse split volatility window makes ZCMD a fascinating watch. Foncho Inc., ZCMD, presents a compelling scenario with its 846.6% cost to borrow, a tiny 1.1 million share float, and its timing right within the typical post-reverse split volatility window. While these factors point to significant pressure on short sellers, nothing in the stock market is ever guaranteed. Keep a close eye on volume, price action, and any shifts in borrow rates or available shares. This is one you'll want to have on your watch list for educational purposes. If you found this deep dive into ZCMD helpful, please hit that like button, subscribe for more unique stock analysis, and let us know in the comments what stocks you'd like us to cover next.